Happy Saturday morning. That means it is time for Cynthia Hash to join us for this week's The Reality of Real Estate. And to take us in behind the scenes so we know more when it's our turn to do this. And most people, Cynthia, I guess over time, what's the average person buys and sells a house over their lifetime?
Oh gosh, over their lifetime, I don't have the statistics in front of me, but I will say that probably one of the interesting things is that has changed very dramatically over time, like say over the last, 10, 15 years,
Hmm.
is the fact that 11 years is usually the tenure now of people in their home before they try to sell.
Well, that
So
kind of tells me, if somebody's going to have a house and they're
yeah.
going to sell it in 11 years. Wow. I mean, I just think about people buying a house and they're there forever.
And I know that during the boom, not the COVID boom, but the previous one, the 2005, it was like 3 years, 3 to 5 years.
Really?
Yeah, and then it went up to about 7 years, during the Great Recession,
Hmm.
and since COVID, and probably in the last, I don't know, 10 years
Hmm.
ish, you're looking at now it is at an all-time high of sellers selling every 11 years or so.
That's an all-time high. Wow. Oh my
It
gosh.
is.
Yeah.
Yeah.
That just seems, I mean, I'm barely unpacked and I've been here 4 years, so I don't, so
I know.
I'm not quite sure I could sell in 11 years. I'd still be looking for dishes, there.
Yeah, exactly. But the reason I think is because you have so many, lifestyles are changing. People are, since COVID, and we now have, everybody, a lot of people work from home,
Mhm. Right.
including you and I,
Well, and,
sometimes.
and when you can, I mean, the opportunity to do work from home is
Hmm.
one thing.
Yeah,
And I guess that opened up a lot of real estate to people. I know it drove a lot of the
yeah.
2020, 2021 craziness because people who had been sort of tethered to Washington, D.C. said, I can get a farm
Eh,
instead of a brownstone. And we call Cynthia Hash at Find Homes
That's right.
Realty.
That's right. That's right. Well, comparing again, maybe, 10 years over 10 years in order to give you really good historical numbers. The first time home buyers, these are basically all-time highs and all-time lows, okay,
Okay.
that we're going to go over a little bit. So first time home buyers, let's talk about them for a minute. About 21% basically share of first time home buyers. That was the share of the entire, between 2025, okay,
Okay.
in regards to 21% of all the buyers were first-time home buyers. That was at an all-time low in 2025.
That was a low. I was going to think that's a big number, 25%.
No.
Wow.
Not at all. And part of that reason is because, we were looking at, 6.5, 7% interest rates, and and on top of the incredible inflation between 2020 and 2024 that had happened. And so it just put first-time home buyers out of the market for,
Mm,
yeah, because they were much higher than that. So that makes it difficult. The other thing too, and here's what we have to look at, is it not only put first-time home buyers out of the market, but it increased the median age of the buyers. So you're looking at about 40 years old that people have become a first-time home buyer.
yeah.
That is an all-time high.
Yeah, my wife and I sort of skewed that number
Yeah.
ourselves when we did it. But yeah, I guess so. You think about it. I had not realized how much of that general because a lot of people point at right now and say, "Oh, everything is so transient," but it sounds like it's been that way for some time now.
Yeah, it has. It
Mhm.
has. And I will tell you the other thing that happened was the fact that the down payments of first-time home buyers, and this is an all-time high. Let me just tell you this. only 10%. That's an all-time high since 1989.
That's
That
a
doesn't seem to
high?
make sense. That's a high, okay? And I'll tell you why it doesn't make sense. Because of the fact that everybody seems to have this misnomer that you have to put 20% down in order to buy a house.
I
Okay.
don't know.
You
Okay.
don't have to. There's so many different loan products that are out there that
Right.
can help you, and these types of loan products are for first-time home buyers. That's
Mhm.
the whole idea, so that it encourages first-time home buyers. Because here's the thing, generational wealth usually begins when you buy your first home.
True. That is true. I have seen real data about that,
Yeah.
and then the question becomes, how do you do that?
Yeah,
Yeah.
exactly. But here's the reason why 10% was an all-time high, since 1989. I have a feeling, and it's not just a feeling, but other statistics that I've seen. There are a good bit of the um so you got millennials,
Yeah.
and millennials have parents, and they're usually the baby boomers, right?
Yes. Yes.
And so I think there's a lot of baby boomer parents who are like, instead of me paying for this big wedding, why don't I help you with 10% down on your first house?
Is that a thing? Really?
Yeah, yeah.
Oh.
So I think that's probably where that came from. Plus the fact that because interest rates have been so high over the past, since 2020, that because of the interest rates being high, they wanted to reduce the amount of principal that they're borrowing.
Yeah. That is a smart thing to do.
Yeah, yeah, yeah. Now let's talk about, repeat buyers for a moment. So this is another all-time high, is age 62, median age of repeat buyers.
Wow.
Yes, that was an all-time high. And that
Is
was in
somebody buying a,
2025.
a new house over the age of 62?
Well, yeah, exactly. So they're buying a new house. Here's why. Because of the inflation during the Biden years, because of that huge inflation, and because of COVID,
Hmm.
the inflation was so high that these baby boomers could sell their house, right, and possibly buy another house all cash because they were downsizing anyway.
Oh, because they're going from the four-bedroom, three-bathroom,
Exactly.
family raiser to, one bathroom and a bedroom on a
Three,
flat.
yeah, exactly.
Yeah.
Three bathroom, three bedrooms, one and a half baths, or maybe a condo, or,
Yeah,
something like
I
that.
see that.
So that's probably why right there. Here's another all-time high for you. Now this one's since 2003, and that's the down payment of repeat buyers, 23%. So in other words, remember we were looking at first-time home buyers 10%.
Yeah,
Now we're
yeah.
looking at repeat buyers. Well, they're able to put 23% down because of the high, COVID boom,
Oh, the
essentially.
resale. So they
Hmm.
take the money
Hmm.
from the last place and they can stick it into the new.
Exactly.
Okay, that makes some
Yeah,
sense.
that's exactly right. So here's the other thing. This is for all buyers with children under the age of 18. Only 24% is who were of all the buyers had children with under age 18. That was at an all-time low as well in
Well, yeah, I,
2025.
I guess societally,
Mhm.
we wanted to have a house for our kids to grow up in.
Yeah,
And you're saying that in the last 10 years, that's changed.
it has. It has quite a bit. And if you compare 10 years of housing data, and in my resources NAR,
Mhm.
if you compare 10 years of housing data, it actually takes has a look of it's very different than what you might think. So
Okay.
in 2020, in 2015, for example, okay, you had a median of about 11 transactions among realtors during uh, tenure during a year a period in 2020 2015 compared to 2025. Okay. It reflected a median of about 10 residential transaction sides. We call them sides. Either we're representing the buyer or we're representing the seller.
Hmm.
But only 5% of NAR members who are basically brokerage specialists that had no transactions whatsoever.
That many. Nothing in a year.
Nothing in a year. Yeah,
Wow.
nothing in a year. And so this particular drop in transactions from 2015,
Hmm.
what that was reflecting is the housing market slowdown
Yeah.
over the past few years. And it was driven by this very limited inventory and very limited constraints for affordability. So all of that are it's related to all of that. You know, economics is everything when it comes to
Yeah.
a lot of businesses, and real estate is no different. But there's this this um this pulse that we're seeing. Okay, we
Hmm.
try to stay on top of it on a monthly basis. But the days on market is a very good statistic to look at to really find out what is happening in the industry.
Hmm.
And so are we in what kind of market are we in? You know, and
Right.
that's the kind of thing that we need to take into consideration. Days on market, it's way shorter still today than it was in 10 years ago, 2015. And I know this is 2026, but it has lengthened in the last maybe 6 months. And
Okay.
but in December 2015, the median days on market were actually about 58. Well, in December 2025, it was down to 39. But you
Mm.
figure
Wow.
between 2020 and 2022, for
Mhm.
instance, Lord of mercy,
A lot
it was
happened.
hours rather than days.
Yeah, yeah. You just you barely have time for the yard sign to get stuck into the ground.
Yeah.
And I remember talking about this. There were
Hmm.
people who were, and I'm sure in the real estate industry, it's a no-no.
Hmm.
We're almost putting the feelers out there, saying, hey, I'm looking for a house. If you hear of something, let me know before it goes on the market, and I'll pay cash
Yeah.
for it. And you had people doing that, calling realtors and offering them,
Yeah.
these shady deals of like, listen, but don't even put it on the market. I'll just buy it.
Yeah, there
And
was
I
a lot
know
of
that
that
does.
going on. And also the clear cooperation thing that I still completely disagree with.
Uh,
And that is the fact that, you got to follow these rules about coming soons, okay,
yeah.
that kind of thing. And to me, if you do that, that gives a realtor advantage for 2 weeks. At least in our market, it's 2 weeks. You have to get it on the market in 2 weeks. You can put it on the MLS, and then 2 weeks later, it has to be active instead of coming soon. And in
Okay.
my opinion, that's part of the clear cooperation. That's part of what got, NAR in trouble to begin with. But they
Hmm.
don't make the rules. The local MLSs make the rules. Okay.
So they
So
can change from place to place.
it can. Yeah, it
Okay.
can.
Oh
Yeah.
wow.
But to me, if you are trying to hide inventory from the general public, I think that is just flat out wrong.
Hmm. Yeah, I agree
It's
with you.
just, yeah, I don't think it should be hidden away in some Zillow pocket or hidden away in some MLS pocket or
Yeah.
hidden away anywhere. I don't think it should be. The only thing you could do is possibly, say I've got an in-house, and you don't advertise it until it's ready.
Yeah.
You don't do, yeah. Hmm.
I just don't think you're helping your client. I mean, if
You're
somebody
not.
has hired you to sell their house, I want as many people seeing it as I want,
That's
not somebody
exactly
who's
right.
already cut you a little bit on the side and you're just going to get whatever the ask is. Maybe
Yeah.
there was going to be a bidding war and you don't know now.
And you don't know. That's exactly right. And so I think we we are in a position where I know there's still some brokerages and so forth that use the 2025 in 2025, 2026, even earlier,
Hmm.
that still use coming soon. But I do not think that is appropriate if we are supposed to be, and the Code of Ethics tells us that we have to have a fiduciary relationship with our clients and
Yeah.
the consumers and so forth. It just doesn't seem correct to
Hmm.
have that happening. And so here's the thing. I think the dis let's talk about distressed sales. Okay.
Okay.
Distressed sales, well, they were present in 2015 and basically following the financial crisis. And in December 2015, 8% of sales were distressed. Not a lot, but in 2025, you we had like maybe only 2% in the last 6 months.
Okay.
I'm predicting that we are going to have more than that. It's going to increase by the end of 2026.
Now, distressed sales, that means, yeah, I know during the bust in '07, '08, that was a lot of
Hmm.
underwater sales,
That's right.
everything's got to go kind of thing.
Yeah.
Is
Hmm.
that still mean that today?
It does. It's still the same thing, but distressed is also, here's the thing. During COVID, if you'll recall, there were a lot of loan modifications that were done.
Right.
And those loan modifications, what they usually did is say, okay, we're gonna basically pad this for you, and we're not going to foreclose on you during COVID.
Yeah.
And so what? But they would pad it against the back end of the mortgage. And so it would get padded toward the back end, and all the fees and the late fees and the pre-foreclosure fees and everything would be padded up against the back end. So the principal
Wow.
basically goes up because of that. Like if you went to go get a mortgage payoff statement, then it would be a lot more than you might think. And so
So
what? Mhm.
So people, I don't think people quite grasp that was going on when like Governor Northam would come up and announce that they've put a moratorium on mortgage
Yeah.
payments or things like that. I don't think they realized that it was going to be a balloon at the end.
That's what's been
Oh,
happening.
wow.
So that's what was happening. I'm not saying in every single case. I'm just saying in a lot of cases.
Mhm.
And so this tends to have a real uh, shock to the consumer. Okay.
Mhm.
And so they would be forced to possibly sell at a loss if they needed to, job relocation or, whatever the case might be, the reason why they would need to sell. And
Mhm.
then they go, holy cow. As a matter of fact, I've got,
Yeah.
I'm talking to somebody right now who is having that issue. Their payment, they did an arm,
Mhm.
unfortunately. And so they brought their payment way down and made it affordable for them to get into the house, but they weren't represented by a realtor.
Oh.
And yeah, and so then they were and they kept spending money on this new construction house, and just dumping money into it, and paying for all these change orders and things like that, and they were paying out of pocket for those. Okay.
Oh gosh.
So they thought, oh, well, I'm really going to have a lot of equity in my house now. Okay. But
Mhm.
then the arm was a 2-year arm, and then all of a sudden their mortgage payment tripled.
Oh my gosh. That's a shock to the system.
Yeah. And so these distressed sales are happening. And I think what we're going to find is that for whatever reason, the COVID still is hurting us, in other words.
I
Uh,
didn't
you know,
realize. Yeah.
yeah. And so I think you also have situations where people try to get out of the property, out of it deals, okay?
Mhm.
And
Right.
these contract terminations are actually, they were higher in 2015 at about 7% versus about 5%, last year. But but the market is shifting, and I'm
Okay.
seeing more cancellations, more panicked buyers when when they finally do get their home inspection done, and they go, "Oh crud, I don't have that kind of money to fix it up," and the seller's not budging.
You
Yeah.
gotta be, have a good realtor there to either make a deal or to say, listen, then you just have to walk away, don't you?
Yeah, you do. Exactly. And quite frankly, you got to get a really good listing agent as well because they need to know how to handle that kind of a crisis.
Hmm.
And be able to say, I mean, had one just last fall that I didn't even put it back on the market. I told them, told the seller, I said, this is what we have to do because now it becomes a matter of disclosure. And if you don't fix these things, then we are going to have to, there's no sense in putting it back on the market because another home inspector is going to find the same thing.
Right.
Yeah.
And you'll probably have to dramatically reduce whatever price you were trying to get for the
Exactly.
house to,
And they
cover it.
they didn't want to reduce the price. I said, you got to do these things, and I'm not going to put it back on the market until you're ready. We'll hold it, and so we did, and then we got the right buyer the next time, and the seller because the seller actually did their due diligence themselves and
Mhm.
got those things fixed that I suggested. So
But that's
anyway,
a good, honest relationship too. I mean, it's
yeah,
not, and I presume because my industry has people that, play fast and loose with that kind of stuff.
yeah.
It's just get the deal done, don't worry about it, and you're gone.
Mhm.
Somebody like yourself that actually comes into it thinking, hey, I'm going to run into these people again, and you want maybe them to call you and say, hey, we've lived here 10, 11 years, you said. It's
Yes.
time for us to
Yes.
sell the house.
Yeah, exactly, exactly. Well, here's another thought here for you. A lot of people think realtors are made of money. That brokerages, they're just
Mhm.
rolling in it.
Not if you're going a whole year without selling a house.
Well, exactly. But also the fact that you got to look at the profile of real estate firms essentially.
Mhm.
So our biggest challenges, quite frankly, is profitability.
How
That's
do you
the biggest
mean?
challenge.
Well,
In
I mean,
other
I
words,
understand what profitability means, but I mean, how does
well,
that translate in the world of real estate?
yeah, because what we're doing, you try to sell, but then, you have these agents that just hop from one brokerage to another well, I want to make 100% of my sales. Well, then what does the brokerage get? You
Who's
know?
sort of setting you up there because that's, they're covering costs and
Yeah.
things like that. What about the kind of things like fixed costs? You've done shows about
hmm
staging and curb appeal and all these things. I imagine those are fixed costs,
They
uh,
can be, but you
yeah,
have to make sure that, the agent, I mean, the agent's not made of money.
no,
The seller really needs to have their heart in it and also their pocketbook in it sometimes because it's their house, it's not the agent's house,
right.
you know. And so I think, but the reason why we have profitability issues is the margins. Let's put it that way. The margins for brokerages is actually quite small.
Oh,
Yeah, it's these huge margins aren't there anymore, haven't been for a while. But this really, if you think about it, because of the sales and things like that, and the fact that inflation is high and so forth, yeah, do we still ask for, maybe the same percentage that we asked for 10 years ago?
hmm.
Uh, yeah, but 9 out of 10 times it's because we're not selling quite as many. So
No.
there has to be, we still have to pay the inflation for everything at the grocery store, just like you do.
Well,
You
and
know,
and people see, some of these eye-popping numbers on Zillow or Redfin where they say, "Oh my God, that house sold for $1.6 million dollars." And what did and they have this idea that the realtor walked away with, I don't know, 25% of that.
yeah,
And if you're only selling, you said the average is 11 sales in a year,
yeah,
and
yeah.
if you're only getting a few percent plus the costs you have to put into it,
Yeah,
it,
because
it it becomes a squeeze.
we don't get any benefits whatsoever. So it does kind of squeeze us a little bit. And we have to pay for our own employment taxes and all that kind of stuff that, if you get a if you're on a W-2, then, your boss is paying for it. They're matching Social Security and stuff like that. We have to
Yeah.
double it because we have to pay our own. But let's take a look at one thing that it might not be a surprise. We're looking at first-time home buyers, and they're continuing to struggle in the housing market. And
Mhm.
the share of first-time home buyers in primary residences, they dropped to about 21% for all of home buyers, and then it was 32%, so it was 11% more in 2015. So we're still having an issue with housing affordability, and it just keeps plaguing us. And then the other thing to keep in mind is the shifting of everything. So you have
Shifting.
the shifting of the laws, based on the class action lawsuit in
Okay.
2024, and the shifting of real estate firms. You sit and train as a broker. You sit and train these agents, and then and then all of a sudden, squirrel. And and they're either off doing something completely different and provide no sales whatsoever, or they're off because the next recruiter called them and offered them a shiny penny. And
Mhm.
so these are things that brokerages have to work with and deal with, and that's just part of the business, I think. But at the same time, by the way, I'm looking for very loyal and very uh, good, hardworking agents all the time. And
Okay.
so those are, but I will say that it's a struggle. Okay, you
Hmm.
don't buyers are still being shut out of the market essentially, but realtors are also being shut out of the market because they can't get sales going.
Okay.
Really the first several months, first 6 months or whatever, you don't really make anything at all
Yeah. Well,
typically.
and also I was thinking about that math from the onset of the program. You're talking about 11 years
Hmm.
somebody's in the house. That means half of those people are less than, which
Yeah.
means they're kind of floating right around that boom where everything went crazy and everything was expensive.
Yeah.
They're selling now. They're trying to get out, that plus what they put into it, and that just may
Yeah.
not be realistic.
Yeah, and that's where we're going to run into some distressed sales, I think, in this industry pro within the next year.
Okay.
Also, you got to think too, about 15 realtors that are out there have been in the real estate industry for under 2 years. And
Wow.
yeah. And so well, think of it this way. That's actually very similar to 2015 when there was about 17% of realtors who were in the business for 2 years or less and no
Okay.
exp so you also have to figure you've got to have somebody that's behind you, underneath of you, under your wings and helping you as a
Hmm.
realtor. And if you don't get that, then you are likely to fail, because there's a good 80% of realtors that get into the business that end up failing and not ever doing it again, because it's very difficult. It's just very difficult. So in 2015, 79% of realtors worked as residential brokerage specialists. In 2025, that ended up being reduced quite a bit, down to 65%. And
Wow.
so, yeah,
Is it
and
just people leaving the business?
it's a little bit of trying to do too much, try like that squirrel thing I was telling you, trying to figure it out,
Right. Yeah.
because they can't,
Chasing a
they
gold
can't,
ring. Yeah. Okay.
they are, yeah, that might not ever exist for them. But property management, commercial, that kind of thing, it's really good that some have expanded into those industries.
Yeah.
It's the same industry, same real estate license that you
Laws
have to
and
get.
yeah.
But at the same time, if you're specializing in commercial and property management, I think something like that is that's what Fine Homes Realty's about to do. We're going to be expanding more into commercial and property
Oh,
management.
okay. Wow,
Yeah,
that's good.
so
So
yeah.
coming soon to a website near you at
Yeah.
findhomesusa.com. Cynthia Hash, it's always a joy catching up to me. I had no idea. So many misconceptions crashed and burned this morning. But we appreciate it as always, and have a wonderful weekend. Go Who's, right?
Yeah, exactly. All right. Take care, Joe. See ya.